Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, you know what, Phil? I was looking around for headlines midway through the week, and didn't seem to be a huge amount going on in the sector. And then, boom, it all happens. So you'll be pleased now. We've got one or two headlines to talk about today.
Yeah, and I'd concur that. I was doing something this week, and somebody said about looking back at last year, and I said you don't need to look far back as last year. You can just look back at this year so far.
Yeah,
and the amount that's gone on in the sector already feels like you've gone through majority of the year as what would have happened previously in previous years. So, yeah, I think there's still a lot happening at the minute in the market, but no shortage of headlines for us as always, Curtis.
No, definitely not. And you've been busy this week, haven't you? Because I noticed you were on an Autocar webinar.
Yes, yeah. I mean,
yeah,
very well. I think Autocar was very impressed. I think Mark Tischel, who's one of the editors at Autocar, was, I think we broke all records in terms of sign-ups, attendees, and what will come from this on demand afterwards. But, it was with Robert Forrester from Virtue, friend of the podcast, and Jurig from Stellantis, who's the vice president, VP for Stellantis sales in the UK. So I think he reports into Maria. It was a good, very timely webinar. Robert was on full form, particularly after the House of Lords announcement, which we will talk about in today's show. Although there was a lot for us to talk about in terms of how the new and used market looked for the year and other things, agency model, but we had an hour, and really we nearly filled the whole hour just talking about EVs, the ZEV mandate, the new VETS acronym that has now appeared. It was a fascinating. I was receiving texts and WhatsApps and all sorts of stuff all the way through, those that were watching live. So fascinating. But also Robert had just come off a Radio 4 interview that he'd done to talk about the January figures and the House of Lords announcement. So Robert was on full form.
I can imagine. And the theme of it was selling cars in 2024. So that is pretty broad, isn't it? So I should imagine you guys did cover a lot of ground.
We could have done that hour. 3 hours. Yeah.
Could do with a part two, I suspect.
We could, yeah. And we should really consider that, because I think Robert, Jurig and myself, we did think at the end there we'd only really got going. And then we had to sort of close it down. But no, it was great. It's I say lots going on at the minute, and I say Robert was talking about we'll touch on it in some of the stories, but the VETS, which is a new legislation that is connecting the UK ZEV mandate for manufacturers with their global CAFE legislation target that they have to achieve as well. So it's getting very complicated in terms of what the manufacturers have to do and the deadlines they need to achieve.
And Phil, you've introduced a new acronym to the show, VETS. What does it stand for?
Bear me 2 secs, caller. It stands for Vehicle Emissions Trading Scheme. And this was an order that came in. Well, it's an order 2023. So it's on the legislation.gov.uk website if any listener is interested in going on a deeper look at it. But as I say, this is where the manufacturers, in terms of get credits depending on how they're performing in the global CAFE target against their ZEV mandate in the UK. So lots going on.
You know what? Just as you know, I thought I'd got my head around the ZEV mandate. You've thrown in this curveball, which adds a whole new element to it.
There's loads of them.
So thank you for that.
Just have a look at that, and you'll see a lot more acronyms that we don't necessarily need. But don't just put VETS into your Google, because let me tell you, you will not find it on the first few pages.
No.
And even if you put electric vehicles, you still won't get to it that way. So I'll put the link into the newsletter on Monday morning.
You're listening to the Motor Trade Radio podcast, powered by Motors.
So headlines this week come from Motor Trader, the Financial Times, Motor Trade News, Car Dealer, and AM Online. Starting with new car registrations get off to a strong start in January, with market up 8%, but powered by fleet sales as private demand drops. Used car sales grow to 7.2 million units in 2023, following 4 straight quarters of growth. The government should bring back incentives for purchasing electric cars, says the House of Lords. Why car buyers are rejecting EVs in favour of petrol and hybrid models. Independent dealer SUV Prestige is forced to close due to difficult trading conditions. Virtue Motors moves to buy back 200,000 shares as group reduces exposure to possible buyout. And we'll finish the show with a look at money-saving expert Martin Lewis's new tool for car loan commission complainants.
Yeah, just what the dealers need at the minute, but
Exactly,
we'll get to that story at the end there, Curtis. So as you say, new car figures for January out, and it's a difficult one, isn't it? Because you need to sort of really read behind the headlines and some of the detail. But we're going over to the story in AM because there is a connection between the January results and what we'll be talking about later with regards to the incentives and what Mike Hawes has been talking about. But the headline is that fleet orders drove January new car registration uplift. And this is basically saying that the fleet and business orders accounted for almost 2 in every 3 new car registrations in January, when the month's market ended its highest level since 2020. I'm not sure how much of a benchmark that is, Curtis, 2020.
No.
Well, exactly a record year for anything, was it?
but that is year zero in the motor
trade. It is
trade.
year zero now, yes. Yeah, pre-pandemic month. But the result was 142,876 new car registrations, up 8.2% on January last year of 2023. 35% of those were private motorists, and saying that the private sector was down by 16% year on year. So they dropped to 50,220 to 44. So there's a lot of noise behind the headlines on this one, isn't there?
Yeah, definitely. And you're absolutely right. On the surface of it, this looks like a good positive story for the sector, with registrations up by 8% there. But it really is that retail demand that is looking rather concerning coming into the new year. I think the expectation was that sales would be a little stronger than that, but 16% down year on year to just 50,244 units. And within this, the SMMT does actually highlight that EV demand, certainly on the retail side, was down. So during the month, just under 21,000 battery electric cars were registered, which was actually up 21% year on year. And the share of the market taken by battery electric vehicles reached 14.7%, but that is pretty much driven by the fleet sector, by the business sector, with very sort of weak demand there from private buyers.
Yeah, and I mean, one thing that has come from this is about profitability in the sector. And again, it was discussed on the Auto Car webinar with Jurig and Robert, because fleet, yes, we know 8.2% year on year increase, which is positive in terms of direction of registrations, but we know that the fleet sector is a more distressed profit channel for the OEMs because of the way that it operates. And if in terms of the dealer network, your part exchanges, your add-ons, and we won't put Gap into this because there's a lot going on in Gap sales at the minute, Curtis, isn't there? But that whole finance and things like this, a 15% decline year on year for that private registrations isn't positive for the dealer network in terms of profitability and customer retention. So it tells a slightly different story at the minute of what's been happening.
Yeah, and just going back to EVs momentarily, so EVs were actually up year on year from 13.1% to 14.7% as an overall market share, but obviously still trailing the 20% required for the ZEV mandate, and that's a key figure that pretty much everyone in the industry is going to be watching on a monthly basis to see how that changes.
Yeah, and interestingly, I mean, it looks like within the top 10 bestsellers within January, there's no real battery electric manufacturer vehicle appeared in that top 10. Throughout last year, you'd see Tesla in there, wouldn't you, on a ad hoc basis as being within that top 10, either with the 3 or the Y. But I mean, Kia Sportage still is number one, followed by the Puma. Now, obviously, the Puma do the plug-in hybrid model, and then the Qashqai, then followed by the MG HS in fourth position there. But no real sort of Tesla or anything in that top 10. So it'll be interesting to see which vehicles were registered in January by model and fuel type and which channel they went through individually, because I think at the minute there's still a lot going on of product availability and the demand for non-EVs at the minute.
Yeah, and we always look at van registrations as well. And unfortunately, I couldn't find any stories covering van registrations this week. But so I've gone to the SMMT press release, and they say that UK van registration volumes actually increased 8.4% in the month of January to just under 24,000 units. And that was actually the best January for 3 years. So again, back to that 2020 benchmark. But the positive sign here is that the market has now grown for 13 consecutive months, and within that, EV van uptake actually increased 19.4%, but again from a very low base, because that only accounted for 1,186 registrations. So a good positive start to the year there for the van sector.
Yeah, and like I say, we'll get on to sort of Mike Orr's comments around the government announcement and incentives when we discuss the later story. But just moving over to motortrader.com onto the next story there, saying about used car sales increased 5% to 7.2 million as supply constraints recede. And this is, we know that we always wait slightly longer for the used vehicle transaction performance figures, slightly earlier than usual this year, but obviously announcing that fourth quarter now. And that's so as I say, up 5.1% to 7,242,692 transactions in 23 there. So, that full final quarter, and saying that it's the fourth consecutive growth for the quarter of used vehicle transactions, which is kind of encouraging in terms of that recovery following the downtimes within the pandemic, and that supply is now starting to increase a little bit more now.
Yeah, and you're absolutely right. They have reported this earlier than normal because there tends to be a 2 or 2.5 month lag before we get the quarterly results. So this is very encouraging. So hopefully they've set the precedent for the rest of the year. So as you say, 7.2 million transactions over the course of last year, used car transactions, and that was up by that equated to an increase of 352,000 units. But I've got to ask the question, Phil, how close was that to your forecast for the year?
98.8%.
Room for improvement there.
Room for improvement. I was 88,000 units out from our baseline. which we'll take that. I think positively, I think we were above our downside was above the 7 million. And as the year progressed, I mean, our baseline was 7.154 million. And we knew it was going to be around that, maybe a little bit more positive towards the upside. But I think that figure of 7.2 is an encouraging recovery figure. So I know it was. We will take that one. I think the question will be is what happens this year. But you set certain benchmarks, Curtis. I mean, my January figure was slightly out for new car registrations. I was within 94.9% of the actual for January. So again, I'll take that as long as we're in the 90s. I'm okay. I'm okay.
Yes, yeah, no, definitely.
I'd worry if I got it too accurate. Start getting the lottery numbers on.
And it's worth just picking out the used electric vehicle sales for the year, because they actually pretty much doubled, rising 91%, and that was to a new record of 119,000 units, which accounted for a 1.6% share of the overall market. So again, a good positive move there. And I know a lot of listeners will be interested to hear that, because what we're seeing now is, and we've talked about this on the podcast before, what we're seeing now is some of those EVs that went into the fleet sector are now being churned into the used car sector and appearing in used car stock for dealers. So a good showing there, good increase for the year, and obviously we just need to see a lot more coming back this year.
No, I think you're right. I think it's encouraging. We know that EVs went through a severe realignment throughout the whole of last year and into 2022. More recently, obviously, the petrol and diesel and overall market took a bit of a severe alignment in Q4. But I think, as you say, they're very encouraging now that we are starting to see the transactional of the used market increase. Dealers are now starting to see the merit and the opportunities in EVs as the prices become more aligned with combustion engine, etc. So no, I think you're right. It's an encouraging result that for the sector that we are seeing that growth in EV transactions, which is what the sector does need.
You're listening to all the chatter that matters on the Motor Trade Radio podcast. If you're a supplier and would like us to profile your business and reach our audience of dealer bosses, managers and decision makers on one of our dedicated supplier specials episodes, get in touch with Curtis and Philip at motortraderadio@yahoo.com.
Next headline is from the Financial Times, and it is UK needs electric car incentives to avoid climate change slow lane. Who says this? The House of Lords says this. So this is you'll remember this, Phil, because we reported on it last year. There was a House of Lords committee looking at the way EVs were being sold in the UK, what needed to be done to possibly stimulate the market. And there are a number of industry leaders, including Phil Jones from Motors, who were questioned by the committee and invited to share their views on the state of play in the market and what needed to be done to stimulate the market. So these are the findings, and this got a lot of coverage this week. And the reason I chose the Financial Times story was that it's possibly the most detailed. Peter Campbell from the FT has gone into a lot of detail behind what the House of Lords is saying, and it really is highlighting what needs to be done now. And this again goes back to what Mike Hawes, the chief exec of the SMMT, was saying in our opening story about new car sales, that incentives now need to be in place to stimulate private demand. Without the incentives, that the demand, we're not seeing the demand needed for that exponential growth that is required for EVs to match to meet the Z mandate.
Yeah, and there's a lot of talk about the VAT on battery electric vehicles, and that will help in terms of this cost of entry in the market. Not only you kind of question, don't you, whether how much of that 15% decrease in private registrations in January was to do with the pressures in the economy and consumer confidence and demand, and the fact that your choice of non EVs is diminishing in the new vehicle market now. A lot of incentives are in place from the manufacturers. We talk about the disparity between new and used vehicles in terms of the price, but the new car market is really, if you're looking at a new car, there is some significant deals on the table now, and there's 0% finance on EVs, but it's still not quite there yet. And there's a point that I know Mike Hawes has sort of alluded to, and Robert Forrester did, that paying 5% on your charging at home, but 20% when you charge it on public charging.
Yeah,
They need to think about that. That's in addition to that infrastructure investment, on-street parking, on-street charging, things like this. But the fact that it does cost you so much difference between charging your car at home and charging on the public network is wrong, isn't it?
yeah, it just seems absolutely ludicrous, and that will be putting a lot of potential buyers off transitioning. The story itself, it also indicates how the committee looked at how sales growth has slowed worldwide, but the UK has actually fallen behind the European markets, well, many European markets, in part because of the government's decision to phase out the plug-in grants in 2022. This is what the report was certainly looking at, and the report goes on to say the grant initially gave motorists up to £5,000 off the price of a new electric car, but that's not in place now, and that is putting off potential buyers, because it goes on to say that affordability is the biggest factor putting off buyers. So the report found that that there were only 9 EV models on sale for less than £30,000 compared with 87 internal combustion engine cars, and that's as of last September. And that's something we'll pick up in the following story. But there's a couple of elements to this, isn't there? There's the upfront price of buying a new EV, and there's the costs associating with charging it using the public network.
Yeah, and we know, it's clearly discussed and evidence that the benefit in kind company car users, that's okay. It's driving fleet. It's, we spoke to them here recently and talk about National Grid and what work she's doing as deputy chair of the AFP. Yes, it's working for fleets. It's the benefit in kind. The company car user is benefiting from that tax initiative, but it's not for everybody. And that's the bit that does need a lot of work. And what proves with it is that, and I'm broad brushing here, but if there are incentives, financial incentives in place for the user, like there is for the company car driver through the benefit in kind and the tax, they will drive an EV.
Yeah.
Change their driving behaviours to work with an EV because it is financially beneficial for them to do so. But there's none of that for the private customer. And the UK is one of the only markets that has no consumer incentives for battery electric vehicle purchases through the private sector. So there's a lot that the UK government needs to think about. And I think one of the concerns is that, will it be left too late, or will it be used as a curry vote for the election, and to do something there that we know that the 2030 to 35 deferment didn't encourage anything with EV. If anything, sales fell following that
Yeah.
announcement because the perception was that I've got another 5 years to make my decision, which isn't true. in many ways. So, yeah, there's a lot going on, and it helps the House of Lords findings and focus. Not sure it's the answer, but it does certainly help.
Yeah, and one of the things that struck me about this story was that the committee, the House of Lords committee, actually criticised the scale of misinformation, and actually citing articles in newspapers, including the Daily Telegraph, Daily Express, and Daily Mail, which included the debunked claim that EVs catch fire more often than petrol cars. And it went on to say that this misinformation masked other areas of genuine concern, such as whether some brands misled customers about the true range of their models. And the committee's actually called for a new body to be put in place to give potential buyers clear and balanced information about battery electric vehicles. But what that new body will be, who it will consist of, I mean, that's open for debate, I guess.
Yeah. I think, is it come out of Cars Are?
Yes, the Kaiser, yeah.
So yeah, I think there's a lot to come from this, but I think it's encouraging. I think the fact that it's been looked at, the UK government has been challenged on some of their decisions and what they need to do. We know the budget isn't necessarily there, but it does call out the cost that it might cost the UK government to do something around VAT. I think Mike Horse calls it that it would cost the Treasury £1,125 per car, and would put more than 250,000 electric vehicles on the road by the end of 2026. So there is a cost, but actually, if you want to move and achieve these targets that's been set, then it may be worth it if they can find the money to do so.
Yeah, and following on neatly from that story is the next headline, which is from Motor Trade News. It's actually from their Switched On EV section, and the headline there is "Car Buyers Reject Electric in Favour of Petrol and Hybrid." So this is some research done by Judge Service, which I helped the guys at Judge Service on this press release. And what they did was it's all part of their car buyer barometer. So they polled the views of 1,000 consumers to find out what their views were about going electric in the next buying cycle. And this research was done at the tail end of last year. So it was after the government had put back the ban on new ICE sales from 2030 to 2035. And it found that most car buyers considering their next purchase are now pretty much evenly split between petrol and hybrid as their first choice, rejecting electric vehicles as being too expensive, which is something we've just talked about, and the public charging network not being up to scratch, which again we touched on. So some interesting results here. What do you think, Phil?
Yeah, I mean, it's clear that I think what's happening, the fact that you say cost of entry, cost of ownership, the charging network, that how much it can cost you on a public charger, and that's you speak to any EV drivers, they're one of their niggles is obviously when they do turn up to a charger on your route that's been identified for them to go to, that one, can you get on it, and two, if you can get on it, does it work, and three, can you pay for it, in terms of an account, because we've still not got this centralized paying system across the EV chargers and things like this. So I think, there's a lot to be done there, I think. But I suppose positive with this, plug-in hybrids, there could be a surge in plug-in hybrids as the choice of petrol and diesel continues to diminish as an option, and the consumers are not quite there yet for EV. I know that people I speak to say that they've tried the hybrid for a while and then they move into the EV space. So maybe that is the step now, that we'll see more and more of the this plug-in hybrid as the option as this transition to EVs, as the plug-in hybrids become better options for them.
Yeah, definitely as a stepping stone. But I guess what interested me in this particular story is the way that buyers are looking at traditional hybrids. And I'm assuming that this is purely based on sort of cost economics, because they know they'll reduce their fuel consumption if they buy a hybrid. They don't have to worry about charging. So maybe hybrids are becoming an alternative to diesel for a lot of buyers, even though they may not be the right cars for certainly for some of those longer journeys. But there's still a lot of life left, it would seem, in traditional hybrids.
Yeah, we'll, and I think they've had some price realignment as well, so maybe there's a cost option there as well for this transition. But I'm sure we'll see it as the months roll out in the new car market registrations.
We'll be back with more headlines after the break.
You're listening to all the chatter that matters on Motor Trade Radio. Powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand, wherever you are on your podcast feed.
Next headline is from Car Dealer, and it is shock as SUV Prestige is forced to close due to difficult trading conditions for used car dealer. So this is the award-winning Yorkshire-based used car dealer SUV Prestige, which has been forced to close after difficult trading conditions made it impossible to continue operating. Now, the business, it's a one-site business based in Wetherby, and was actually one of the largest independent prestige car dealerships in the UK, stocking up to 300 high-end sports and luxury vehicles, as well as 4x4s. And I did mention they're award-winning. They have won a lot of awards recently, certainly from Car Dealer and Motor Trader as well. So this is really disappointing news, isn't it, Phil?
Yeah, and I mean the story in Car Dealer. I mean, the look at the picture there with all the colleagues and staff of Steve Deshy, who's a fantastic guy. He's as you say, won recent awards at Car Dealer. It said that he is obviously devastated. I mean, they founded the business in 2013, rapidly grew the business as a husband and wife team with Steve and Satinder Deshy there. So, I mean, the pair of really, I mean, you mentioned the awards there, but the pair won Dealer Principal of the Year in 2022 and in 2023 at the Car Dealer Used Car Awards there. But as you say, they deal in that higher end luxury prestige by default of their name. It's Porsches, it's Bentleys, Mercedes, things like that. And you can understand that volume of vehicles in that high end market, with the realignment of the sector that we've just experienced in the fourth quarter, predominantly in the used car market, would have hurt them financially. That there was some significant readjustments of those prices throughout that Q4. And if that is your dominant profile of vehicle, then you'd have seen some significant depreciation hits within that used car stock profile.
Yeah, I mean, it's very much the sort of human cost, isn't it? Of every month we talk to Darren Martin from Cap HBI about the sort of rises and falls in trade values, and certainly when Darren's talking about some of the sort of dramatic falls, this is the impact, isn't it? This is the impact on businesses that have possibly bought high and seen the price of that vehicle come down and forced to sell low. And within the piece, the Car Dealer actually spoke to Steve, and he said, "It's not been a great time for us. Unfortunately, due to difficult trading conditions, we have had to close the business. We are now focusing on trying to help find alternative employment for all of our amazing staff." And you can tell by the photograph that you referenced there, Phil, in the story, they've got a big team there, and the photograph that they ran with the story is them celebrating what their car dealer award wins, and without the staff they couldn't have won it, and now they're in a position where they're sadly without work. So a really sad story, this one.
It is. It's a real shame, because I think we would have seen a lot and heard a lot more from Steve and his wife and his team going forward. But hopefully, best of luck, Steve, if you are listening this morning, that you managed to help a lot of your staff out and find alternative employment for them. And I've no doubt we will see you again in the automotive sector once everything's settled down and resolved. So good luck with everything.
And we'll stay with car dealer for the next headline, which is one of my favourite headlines of the week. It is Virtue Motors buys back 200,000 shares as car dealer remains a sitting duck for investors. I'd love to know what Robert makes of the sitting duck reference, but this I think only car dealer picked up on this story this week, and it is an interesting one, because it says that Virtue Motors has confirmed the purchase of more than 200,000 shares as part of a buyback scheme, which was actually announced last year. And in a statement posted during the week to the London Stock Exchange, the group announced it had bought back a total of 218,000 shares, ordinary shares, and the outfit says the shares were valued at 10p each, but it has paid significantly more to bring them back into company hands. And this is all about sort of, I guess, reducing their exposure to potential buyers.
Yeah, and a lot of these things is about having control, having a voice at the table, protecting and managing that share value, because at the end of the day, it's the shareholders, like everybody else, and it's all about that share that you have, and that voice that you have control. We know that Marshalls, when that was floated and then eventually sold, the Marshalls family had a significant shareholding in that business. So you only had to do the deal with the Marshalls family, and the deal was basically done. And
yes,
you remember our conversations with Pendragon and Heading and things like this, that it is all about that share equity and allowing you to have control of what happens with that business. So I can understand it, and I think they've with the following, I think there's been one or two forecast announcements of the business that has dropped their shares, and if there's a time to buy, it's probably now, whilst the shares have been a little bit distressed than we've seen in recent months, and for them to get control and like I say, have a say at the table. But it's interesting because back on the interview that we had with Mike Allen recently, and with Steve Young from our regular catch up with Steve Young at ICDP, kind of says that Virtue, as you said there, sitting duck, because they are public and they can be approached for a buyout if somebody wants to do that, because there's not many left.
Yeah. Well, yeah, and this comes hot on the heels of our report last week about Inchcape talking to possible buyers for the retail side of their business in the UK, which pretty much would leave Virtue as the only listed dealer group in the UK.
Yeah, I mean, you've got Caffeines, but yeah, it's still a family business.
Yes, but with a lot of foreign interest in the UK, you can understand why that they've launched this buyback scheme. So it'd be interesting to see what happens here.
Absolutely, it feels like we need to be getting you on, Robert.
Yes,
I know you'll be listening, but everything from our chat on Autocar, your interview on Radio 4, and obviously with the announcements, what's going on, and trading conditions. I mean, maybe we should get a date in the diary, and we can hear it all from yourself, Robert. So we'll get in touch and we'll give you a shout. The final story of today, and this isn't going to be the last time we'll probably talk about this one, because I think it's only just starting to find its legs is that we're heading back over to AM Online. And the many listeners to the podcast this morning would have probably watched the programme this week, because it's certainly started to hit the Facebook and X feeds.
I thought you were going to say hitting the fan, which I think it's also done.
Well, there is that, yeah. And this is the money-saving expert Martin Lewis launches tool for car loan commission complaints, saying that the consumer champion Martin Lewis has launched a free tool for consumers to use in logging a complaint about discretionary commission agreements, the DCAs, in the car loans. And I know that this has had an immediate impact on the sector, not just with the lenders, but also the dealer network, because many are going back into the dealer network as their relationship holder between them and the finance company, to lodge complaints and that as well. So I think this is just starting to get legs, and many are calling it as the next PPI. Some people are disputing that, but I think the speed in which this is gathering pace, and that Martin Lewis is obviously on a mission to get this going, it does feel like a potential next PPI, doesn't it?
Yeah, definitely. I actually watched the show, and Martin Lewis made it quite clear that he does see this as the second biggest ever UK reclaim after PPI. And the tool that is mentioned in the headline of this is basically a template. So you can go to the Money Saving Expert website and download a template letter, which you can lodge your complaints with your lender. And it was interesting that on the program, Martin Lewis was saying, if you haven't got your paperwork, or you're not sure when you took out your agreement or what percentage you were paying, then get in touch with your dealer. And I could envisage dealer phone lines going into meltdown on Wednesday morning, from 9 o'clock as a result of that, because it's a very influential program and indeed website, and it would have got a lot of traction. A lot of people are thinking back, well, what was I missold? Did I take out finance? And this one's going to run and run. But interestingly, there was one person in the audience who asked a question that she took out finance on a 0% APR, and would she qualify for any compensation? Clearly not, because there was no interest charged on that. But it just shows the level of possible confusion, uncertainty, and that there's going to be a lot of buyers who will think that they are entitled to money back, who will put in claims. So this is going to run and run, Phil.
Yeah, and I do feel for the sector, and particularly we know that the when we spoke about this story in the Telegraph and when it broke, but the provisions that some of the lenders have put in place to tackle this, and that this is about 1,000. I think the two first examples were £1,000 payouts per claim, but it, alongside the monetary value of all this, it's the time, isn't it? It is. Yeah, it's that people inquiring, that somebody's got to deal with that inquiry. They've got to process paperwork. They've got to respond, particularly within that dealer network. And I've heard and seen a few snippets where people are thinking about folding their business on the back of this, because they're seeing that how much it's going to cost them, or potential cost, and you've got obviously relationship damages involved with some of this as well, because it's previous customers, etc. So you've got to feel for the dealer network on having to handle this. As I say, it's probably going to run and run. I think. I don't know what the answer is. I mean, like you say, the fact that question came out, that do they get commission? Do they get a compensation for a 0% finance loan? Well, that's not what this is about. This is about difference in charges. We're going to watch this one happen a lot more, I think.
Yeah, I mean, the FCA has actually set a deadline of September, which is when it'll announce its ruling and what it'll do as a result of this. So at least there is a deadline there now to actually focus on. And this won't, unlike PPI, this won't run for years and years and years. This will be, we'll know back end of the year what's happening about this.
Exactly. So that's it. I mean, hopefully we've covered a lot there. I think there's a lot going on with the new car registration results for January, used car performance figures. They say, we'll try and get Robert on to expand on a few of his conversations and headlines around what's been happening with the virtue and his view on the ZEV mandate or VETS legislation or etc., etc. Apologies, more and more acronyms for the automotive sector. We don't need any more now, but we are going to get them. But that's it for us. So, we will share everything on the newsletter on Monday morning as usual. So any links that you may want to follow up on, then do please check them out.
Yeah, that's all for now. So many thanks for joining us on the Motor Trade Radio podcast. Until next weekend, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.